Good day, folks. Welcome to another trading week. I've got my sticky note here. Not going to show you that right now, but I'm going to be covering some of these other things a little later, and that's oil and gold and stocks and currencies, including the end pairs, and we'll talk about Bitcoin and VIX and that sort of thing, but not in this video. In this video, I'm only going to cover natural gas, but if you want to see my stuff on these sticky notes, as I said, look out for the video at the end. So here we go. Here's the day chart on natural gas. This is the Henry Hub NYMEX Henry Hub price. And we had a bit of a rally last week, moving out of this consolidation zone just around about the $2.50 level, which was always going to be a key level. I consider this spike below there to be a bit of a false break, a spike down to support. You can see the support level there, gap down, rally back up, and then a sharp rally thereafter. Means that this area where I've got the circle drawn is a pretty important area, and I don't think we're going to get below there easily. You can see this is the long-term division between the bulls and the bears that I've been talking about for a very long time. There's the bottom of the range around the $2 level, just below that, the bottom of the bearish part of this chart. And then the bullish part of this chart is between $2.50 and $3, even up to $3.50 now. We've got an interesting chart pattern here. So this is the consolidation level around 250, and it's also where the 200-day moving average is. As I said earlier, I think that spike down, that gap down, and sort of strong rally back up again is a sign that that support's going to hold pretty well. There's the 200-day moving average in purple, which we closed above last week, and also managed to burst out of this consolidation zone above the 20-day moving average, the green one, and forming this spike low. I consider that to be, at this stage, and things can change, a spike low, a false break, providing a liquidity grab for a fresh leg to this rally. So now we're well above the 200 and the 20, and we're also above the 50 and the 100. We've closed above there on a daily basis. That's all really good news. However, you'll know that this level here around the 2.85 level is super important. Not only that, but if I zoom out a bit, you can see we've come to the underside of this rising channel. We broke down through it and we've retraced back to the underside of it. That's definitely going to provide some resistance. This is a classic trading channel, a channel break, a gap down, and now a retest of the channel from underneath, running right into resistance at the 285 level. So I expect that we will struggle. You can see it's also previous swing low and swing high, and I've got that area marked off in red as a supply and demand zone. To get through there, it's going to be pretty tough considering it's also the underside of this channel. So expect a bit of a retracement. My contention is that this retracement will be shallow and that we'll pull back a little bit and bounce back up into the channel and then head back towards the top of the channel. Initially, this first stop at about 350, 360, and the top of the channel now, which is above $4. As I said earlier though, this area here is going to be super crucial. Some people think, and not incorrectly, that this is potential for a pullback to the channel and a move down to break below this current low at 222 or so, and then to retest the support, this supply and demand zone at around about $2. That's not an unreasonable thought. Rising channel breakdown, retracement to the scene of the crime, as some people like to say on YouTube, and then a continuation of the move to make a new low. However, I think this is probably slightly weighted in the favor of a shallow pullback, followed by a move back into the channel. You can see I've got this black arrow drawn up to this level here at around about $3.60. Not only the channel center line, but it's also this previous high. So that's a perfect target. But then so is this $2 level below us. We'll have to wait and see how this plays out. For now, we remain long. I've taken 50% of my profit from $2.60, and I'll be taking an additional 25% profit at $3, just underneath this rising trend line. For the rest of it, I'm going to leave it on for a rally, trying for $3.50 or 60, and maybe even $4, and I'll continue to look to buy into dips. We've now got extra ammo after lightening this current position considerably, having taken quite a lot of profit. So good luck for trading your natural gas trades today, and watch out for the video that follows this one, the videos that will cover some of the instruments on the sticky note. I'll speak to you soon.